I'm Thalia Hayden with ETFguide. It's so nice to see you again. In these turbulent times, one thing remains constant: the importance of electricity, and with that, the need for more copper. Helping us to understand this renewed interest in copper is Steve Schoffstall, Director of ETF Product Management at Sprott Asset Management. Steve, welcome to the program. Great to see you again.
It's great to be back. Thanks for having me.
And let's get started. For those in our audience who are new to copper, what's so important about it?
Yeah, so copper is the third largest metal based on how much is mined, and the value, it's about $250 billion or so last year. It comes only behind iron ore and gold, so it's, from that standpoint, it's very important to everything that we're doing, from electrification to building. You think construction, you think of your wiring and the plumbing that goes into houses. We see it in all sorts of electronics. Basically, anywhere that we see electricity needing to be transmitted, you'll find copper. It's the second most conductible metal behind silver, but it's much more cost effective than silver is, costing about $4.45 a pound this morning versus about $37 per ounce for silver, which is why you tend to see copper being more in demand in applications than you do silver. It also has demand that's rapidly growing as we're going through the energy transition, relying on AI and data centers and all the energy intense needs that are coming from that. And what we're expecting as we move into the coming years and decades is a structural supply deficit for the copper market.
Great, let's dive in now. Sprott provides the Sprott Copper Miners ETF, ticker COPP, and the Sprott Junior Copper Miners ETF, ticker COPJ. Why two different ETFs?
Yeah, it's a great question because at the surface there are some similarities that are really important, and I think that really sets the Sprott lineup apart from what we see from other strategies. First and foremost, both are pure play strategies, and what we mean by that is that they have at least 50% of their revenue or assets tied to things like copper miners, producers, or explorers. This pure play test is very important in the copper market because when you look at the 10 largest producers, only 3 of them are actually publicly traded or majority copper. So you could see some companies that get 10% or 12% of their revenue from mining copper would be included in other ETF strategies. In our strategies, we focus on those companies that are predominantly copper producers. By focusing on these pure play companies, what I think investors will appreciate is that they have a lot less unintended exposure relative to what they might have if it's more of a diversified type product. But when we do look at some of the differences between the two funds, and there are a few important ones, I'd say first with COPP, that's an all cap mining ETF, so large, mid, small cap. And then as of June 23rd, it's also going to have the distinction of having about a 5% allocation of physical copper. So this is a change that we've made to the index strategy in conjunction with NASDAQ. We think it adds an additional way for investors to access the copper market. The pure play notion as well as the physical component are two things that are unique to this product versus any other ETF on the market. If we look at COPJ, it still has those pure play characteristics, but it focuses more on those smaller cap miners, which tends to be more exploration and development type companies. A lot of time investors will like the junior space because there tends to be a little more volatility or leverage to the underlying commodity. And oftentimes the larger miners are looking for acquisition targets to look to the junior miners. And we've seen, some conversations where these larger miners are looking to grow into the copper space. They're looking for pure play copper miners. And we think that's something that investors are really gravitating towards.
Got it. Makes sense. Tech companies, they use a lot of electricity and therefore a lot of copper. Where do you see that demand going?
Yeah, so this is an area that's really started to ramp up over the last 12 to 18 months as AI has really started to move into the forefront. Copper has to be used, not only for getting electricity to the data center, but these data centers are very energy intensive endeavors. And what we see is, copper being used oftentimes in favor of fiber optics, for example, because it runs much cooler than what fiber optics does, and that keeps the cooling costs lower. Another thing that benefits copper as it relates to AI is It is very energy intense, but at the same time, these tech companies have to grapple with the energy intensity along with staying true to their clean energy mandates that they often have on a corporate level. And so what we see is they're investing in things like wind and solar and a lot of investments for power, data centers going to nuclear power. When you look at the renewable energy side, it tends to be very much copper intensive. It's about 2.5 times the amount of copper needed for a solar or wind installation compared to a traditional fossil fuel counterpart. And just to give you an idea of kind of the growth that we see in this industry, out through 2030, AI is expected to require about 5 metric tons of copper through the rest of this decade. If we go out to 2050, it's anticipated that on an annual basis, AI will consume about 3 million metric tons.
Now, recent legislation is looking to reduce or even eliminate tax breaks and incentives for renewables and EVs. How might that affect copper?
Yeah, so the EV story is, it's an important part of overall copper demand, but it's, not the only part. We have AI, as we discussed. We have electrification as it's related to technology or higher standards of living in developing economies, the energy transition. Those are all aspects that are contributing to copper demand. I think one thing that tends to get lost as it relates to EV is that a lot of the growth that we see in that market is coming out of Europe and out of China. So if you were to look at, kind of divide the world into 3 separate sections with China, Europe, and the United States, the US would rank number 3. Just last year, we had about 17 million, actually a little bit more than that, of EVs sold on a global scale. But what you're starting to see is, as you mentioned, some of the rollback of these subsidies. We see that playing throughout Europe in certain cases. And there we've seen growth still growing, but it could have some impacts. I know there's some discussions here in the United States about rolling back some of those subsidies. I think what might be the next wave on a global scale, as those subsidies do get rolled back, or if they do get rolled back, is that you might see governments moving from a carrot to more of a stick, where now they're going to, instead of give you a subsidy to purchase an EV, they might have additional taxes if you're buying gas-powered cars. We see similar things like that happening in Norway. But I think how things play out in the United States, at least in the near term, is that hybrids, and probably specifically plug-in hybrids, are going to be that next step until we get onto full electrification.
Steve, what challenges do miners face when it comes to increasing the supply of copper?
That's a great question. We see this kind of pop its head up amongst a lot of critical materials. So we see it with uranium, we see it with silver. Copper is no different. There's about, I'd say, probably 4 distinct things. You can make an argument that there's more than that. But first would be that miners are grappling with declining ore grades. So what this basically means is that they've mined out all of the easy to get to material, and they have to move more dirt in order to get more copper out of the ground. So this is an issue that we're seeing. Secondly, I think what you're seeing, it's very much related to that, is that a lot of the copper miners are focusing on expanding production at existing mines because that's where the copper's at and they know how to get there. That they're not investing as much in exploration as they should. And this is leading kind of to the third issue, which is kind of a downstream impact of that, is that we're not really having these major copper discoveries like we're accustomed to seeing. Over the last decade, we've had 239 copper discoveries. Of those, only about 14 would be considered major discoveries. So while we're mining out these other mines that have been producing for decades upon decade, we're not finding these large discoveries to take over with that. I'd just say finally, one area where hopefully some of the direction we've seen come out of the White House and also out of the Canadian government is they're looking to streamline the permitting process. I think that could go a long way of shortening the lead time to get from discovery to production, which could be 15 years or more in many cases.
So would you say investing in copper is like investing in gold, silver, and other precious metals?
I'd hesitate to say it's kind of like a precious metal or kind of on that same plane. I think if you were to choose one, it's kind of acts a little bit more like silver. The reason for that is because, one, they're both conductive, as we talked about from an electricity standpoint, but silver is actually about 60% industrial at this point. So while it retains some of those precious metals or monetary type characteristics. It does have a large percentage that is tied to industrial base. So I think from that regard, there's some similarities with silver, but I don't think I'd make the assessment that it, acts like a precious metal.
Okay. Does copper, is it a good hedge against inflation, would you say?
I think you could see some of that. While it's not a precious metals, there is some aspects of the copper market and critical materials in general that could lend itself to being an inflation hedge. If you just think about the energy transition, for example, last year about $2.1 trillion was invested. That's a trend that we've seen growing fairly significantly year on year. That spending is by nature inflationary as you're pumping more dollars into a certain market. I think it really depends where you're looking at within the industry. If you're a manufacturer or somebody that's creating and manufacturing copper wires, for example, you're going to be a cost taker, so higher copper prices are going to hurt you. We tend to look upstream in the supply chain, again, to those pure play miners. In that case, we expect them to benefit from higher copper prices as they pull copper out of the ground. We would expect that to have positive impacts for their financial position with the higher copper prices. So for that reason, why we tend to focus on the upstream companies and don't really go downstream where you have to worry about, you could have the narrative right that, you expect higher copper prices or higher demand, but based on the companies you're investing in, they might be price takers and subject to higher prices and the negative consequences of that.
And last question before you go, Steve, how might a copper ETF fit into most investors' portfolios?
Yeah, so, we believe that we're in the very early stages of a structural uptrend in the copper market. With that, we do see some investors that look at copper and they have a well-diversified portfolio and they decide that, given the growth that they expect out of the copper market, they put this into the growth sleeve. We also do hear from investors that might take a much more thematic approach, and they could have a basket of companies or funds, usually is the case, where they're investing in that they believe to be high growth. And we see investors, including allocation of copper or copper miners in those high growth allocations as well.
Steve, always great to see you. Thank you so much for your timely insights and keep up the great work.
Absolutely. Talk to you next time.
That does it for today's episode of Metals in Motion. Thank you for joining us. If you enjoyed the show, please tell us in that comment section below by hitting that like button. To learn more about the copper ETFs discussed on today's program, be sure to visit SprottETFs.com. I'm Thalia Hayden with ETF Guide. Thanks for watching, and we'll see you next time.